Today is Monday, July 10th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. Today's guests are Mark Soderberg, ADMIS Senior Ag Analyst, and Alan Bush, ADMIS Senior Financial Economist. Starting with the financials this morning, Alan, why don't you give the viewers an overview of the reports this week that could have the most market-moving impact?
Okay, well, first of all, on Wednesday, we'll have the June Consumer Price Index, and that is anticipated to be up 0.3%. And then on Thursday, the June Producer Price Index guessed at up 0.2%. So these are the two most important reports that we will have this week. But also on Thursday, we'll have the Fed's Beige Book on the economy. That will be out at 1 o'clock Central Time. And this is the book that is produced approximately 2 weeks before the monetary policy meetings of the Federal Open Market Committee meeting. And that next meeting is scheduled for July 26th. And then on Friday, we'll have the July Consumer Sentiment Index, and that's anticipated to be 65.
Alan, in regard to the Beige Book, tell our viewers, what that report is.
Well, basically, it measures the evidence of the state of the economy. On each occasion, a different Federal Reserve District Bank will compile this book based on what they're seeing in the economy. So it's somewhat of a precursor to what they are looking at and potentially what will be the outcome of the next policy meeting. So I suspect that the evidence will show that there is need for another rate hike. So this is something that has been done for many, many years, and it's just an outline as to what the Fed is seeing in the economy.
Thanks, Alan. And what's the current consensus view on the outlook for stock index futures?
Well, right now, believe it or not, even though with the indices, at least the S&P and the NASDAQ, not that long ago hitting new highs for the year, many analysts continue to be bearish on balance. This seems to be one of the most hated bull markets in history. So the consensus view seems to be that this market cannot go much higher. So we're getting a lot of that in what I'm seeing in printed material and what I'm seeing on the news channels. So from a contrarian point of view, I believe that in itself suggests that we'll probably see some additional gains, at least in the short term, for the indices that have been the strongest. That would be the S&P and the NASDAQ.
Alan, I know you follow the U.S. dollar closely. What's your outlook for the greenback right now?
Well, right now, it appears to be underperforming the news. On Friday, we had a mixed employment number, and yet there was a major breakout to the downside in the dollar index. Some of that may have been technical with an uptrend line that was penetrated, but to underperform the news so dramatically suggests that there's probably going to be some short-term weakness developing in the dollar index.
Thank you, Mark. Looking at the grain markets, what are your expectations for tonight's crop conditions report? We've had some rain out there.
Yeah, we have, and I think that's had a beneficial impact on the crop. We're looking for about a 2 to 3% increase in good to excellent ratings for both corn and soybeans. To date, conditions for both crops have been the lowest since the last major drought in the U.S. in 2012. Conditions this year likely would have been even worse had it been for the fact that temperatures have not been above normal for an extended period of time. Good rains this past week east of the Mississippi River, as well as the western Corn Belt, should go a long way in helping stabilize crop prospects. Areas not receiving good rains here in the past week were central Missouri, right straight north through central Iowa into central parts of Minnesota, along with the northern half of North Dakota. In spring wheat, I look for crop conditions to be steady, perhaps down another point or two, largely due to the dryness in North Dakota. And for winter wheat harvest is likely nearing that halfway point. If we do get one more crop condition report, this will be the last. And I look for conditions to be steady, slightly better there.
What about Wednesday's USDA reports? Can we see any surprises there, Mark?
Well, surprise-wise to me, I think the biggest surprise, I'm not expecting a change in the yield forecast for soybeans, where many others are. I think the USDA will hold it at 52 bushels an acre, with plenty of time for conditions to improve, along with better rains and better weather. So I look for production there to be 4.14 billion bushels. That's about a 200 million bushel reduction from the June estimate. That's largely due to the lower than expected acres, down 2 million in the June report. I think carryout numbers will be down a little bit in old crop 225, and I think new crop will also be about 225 million bushels, well down from the 350 because of the lower production. So I think you will need to see usage cut as a result of the lower production. I do think they'll cut the corn acres or the corn yield about 5 bushels an acre to 176.5. That will drop production to about only 15.236 billion. That's down only 30 million because there we had a big increase in acres. I think we'll see some usage changes, feed usage likely up about 150 million, partially offset with lower exports and ethanol production. In wheat, a lot of numbers in wheat. I think the most critical one there is the winter wheat production. My forecast there is for 1.187 billion bushels. That's up 51 million. That from the higher acres from the end of June, and a slightly higher yield estimate as well.
Finally, Mark, is it all about the weather now, or are there other factors impacting agricultural prices?
Yeah, weather's still going to be probably the most important focus of the market. But one thing I'm real eager to see this week is we've seen a big improvement in corn basis out of South America and in Brazil. So U.S. prices are no longer at a huge premium to South America. So start to look to see if we see better demand for U.S. corn and soybeans, particularly on new crop. To date, those numbers have been rather weak. But now we're at a much more level playing field with those out of South America. So I think that's a key changing dynamic in the marketplace that I think we should start to generate some better demand for U.S. crops.
Great. Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.